Hello and welcome to episode 62 of Mo Money, the investing economics show for millennials by a millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, the creator and host of all this, MC Mo. Now let's get to the money. This week we are going to be talking about managing mania. In the words of Yogi Berra, investing is 90% mental and the other half is physical. Your worst enemy when it comes to investing is not going to be the government, it's not going to be the other investors, it's going to be yourself. You have to learn to control and conquer your emotions, and one of the hardest times to be the Julius Caesar of your emotions is when everyone else seems to be letting theirs run wild. In the words of J.P. Morgan, there is nothing in this world which will so violently distort a man's judgment more than the sight of his neighbor getting rich. This could not be a more perfect quote to match the environment of not only things like cryptocurrencies, but also the stock market. When you see cryptos ripping 50% to 200% in one day, and you see the stock market hitting new highs once a week, sometimes multiple times in the same week, and articles with headlines like "the market will never go down again," you have your friends telling you how much money they're making with this stock, the guy at the bar is telling you another story about his huge winner, and you start saying, if these idiots are all making this money doing this, how hard can it be? The moment you start thinking that, you're finished. Because you're right. Those guys are idiots. And I'm not here to teach you how to be an idiot, but how to be just a rational investor when surrounded by those very convincing idiots. First rule to managing mania is to stick to your plan. It's easy to spot idiots in the investing world because they are the ones that don't have plans. They just kind of jump around anything that's moving. They're the ones who laugh at you when you ask about an investment and then just tell you it's not important, just buy it and make a fuck ton of money. If you don't have a plan either, well, you better get one before an idiot bites your neck and you start thinking just buy it and get rich is a good plan. Know why you're entering each investment and have an exit strategy with conviction. When this happens, I will sell. The second rule of managing mania is be diversified. Diversified does not mean owning 10 different cryptos. It does not mean owning 10 different technology stocks. When manias end and bubbles pop, not everything gets dragged down together. Believe it or not, there were stocks that went up during the financial crisis. Utilities, cigarettes and beer, discount retail stores, shit people are going to buy during the good times and the bad times are a good way to diversify and weather the effects of a mania. Also in mania times, it's good to take profits on stocks that have done well for you. That way if the mania dies down, the market goes down, you will have some excess cash in your account to take advantage of these new discount prices. The third rule of managing mania, think big picture. Remember, you're young. If you're 18, 25, 30, 35, in terms of investing, you're still young and have a lot of years of gains and compound interest before you. Don't get caught up in short-termisms and try getting rich overnight because most likely you'll end up dead broke before the end of the day. The final rule of managing mania is know the risks and know your limits. There have been a lot of reports of people maxing out credit cards to buy cryptocurrencies, which is terrifying, and it mirrors stories of people taking out loans and mortgaging their homes in the past to buy stocks. If you took out a mortgage to buy Bitcoin at 150 a few years ago, everybody would consider you a bold genius. But at the end of the day, the risks are not worth it. Do not buy investments with money that you do not have and money that you cannot afford to lose. If you say, I'm going to stop eating at restaurants to save money to invest, great idea. If you say, I'm going to stop eating to save money to invest, terrible idea. The most important thing is take care of your necessities. Food, clothing, shelter. Do not risk those things chasing profits. Bottom line, when I was in college and went to parties, I always knew where the exits were. Just in case the police showed up or a fight broke out, you want to be able to break out. It's the same with investing. If the market seems to be in a crazy mania phase, you don't want to be the loser on the outside of the party screaming, this party's definitely gonna get busted, but you don't want to be the idiot on the inside, underage drinking and no idea what is going on around you until the cops come and put you in cuffs. You want to be the person enjoying the party but with an eye on the window, ready for the police and an exit strategy for if they show up. Don't try and be a hero and time the end of the mania perfectly. Just be cool and rational and exit when you feel things have gotten a little out of hand. The market may continue to go up higher and higher once you leave, but take the time and lack of pressure to reevaluate and see if you missed something. Just remember a saying, Never mistake a genius for a bull market, meaning if the markets are going up, even fucking morons will look like geniuses. If you follow these rules, you'll be able to invest and keep it cooler than Freddie Jackson sipping a milkshake in a snowstorm, while others are running around like chickens with their heads cut off that have also been lit on fire. Thank you so much for watching another episode. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, share, follow me on Twitter, follow me on Instagram, like me on Facebook, check out themomoneyshow.com. Mo Money, signing out.